Hello everyone, let's get started. I have no financial interests and I have no sponsored links. However, please always check the description of my videos, as in most videos I put additional information such as links to documents or the sources from where I have the information I'm talking about. In this video I'm trying to explain buy and sell walls again. There is a lot of confusion around it, and I admit it, I also had to think a lot about these sell and buy walls. I have created an illustration for easier understanding. On the left hand side you see the bid order table, and on the right hand side the ask order table. They have both a wall set at the price of 4. Let us take a look at the ask order table first. The lower the value you ask for the thing you want to sell, the faster it is executed. So there is always a down pressure, basically, if you want to execute faster than others. It is the opposite on the bid order table. There, the more you're willing to pay for something, the higher the chance that your trade is being executed fast. So now you understand the basic principle. Let us take an example. The current price is at 2 and you want to sell urgently. You cannot ask for 3 because you wouldn't sell, because the other sell or ask order at 2 will be executed first. So you will need to put a lower price at 1 and then your ask order will be executed immediately, more or less. The same happens on the bid orders. Again, let's assume the price is at 2 and you want to buy. If you offer 1, no one will sell because the price is already 2. And those wanting to sell want 2. They do not want just 1. So you have to offer 3 in order for the trade to execute. And if you have understood this, the basic workings of the exchange, then you should also understand the wall now. The sell wall is basically the same as a normal order. It's just magnitudes higher in price, but definitely higher in assets which are sold. You can see in the table everyone but the sell wall sells 100 items and the sell wall sells 1,000 items. So the sell order at 5 will never be executed unless there is coming a buyer along who is willing to pay more than the sum up to the sell wall, which is 4,600 right now, or who is willing to buy way more of the asset than the 1,300 up to the sell wall. I repeat again, unless a buyer wants to buy more than 1,300 of the asset, or who is willing to pay more than 4,600, there is always a down pressure on the price for those who want to sell urgently, because they cannot ask a higher price than the sell wall. On the bid order side, it's the same thing, just the other way around. Let's assume we have a buy order at 4, about the amount of 1,000 items, same as in the sell wall. So if you urgently want to buy something, then you need to put a higher price than the buy wall. And the buy wall is at 4, you need to offer 5 or 6 in order for your trade to be executed fast. So we have an upward pressure on the buy order or the bid order table. The bid or buy wall can only be overcome in this example if a buyer is willing to pay more than the 5,100 in the sum of all bid orders above the wall, including the wall. The important thing to know how to create such walls is the sell walls. For the sell walls, you need to kind of put in escrow, like in the account of the exchange, the asset you want to sell, such that in the fact that the trade is executed, your assets will go to the new buyer. And the same holds true for the buy orders or bid orders. There you have to put the amount of your wall in fiat aside for the fact that it may happen at one point in time that actually your bid order is being executed, and then you will receive the requested amount of assets. Now, as long as there is just one sell wall and no buy wall, there is just downward pressure on the price. However, if we on the other side, on the bid orders, have the bid wall or the buy wall, then it creates kind of like an equilibrium, because it's always a little bit balancing between the two walls. In order to illustrate this equilibrium or balancing between the two walls, check this graphic. I moved the walls. I moved the sell wall a little bit up to 5 and the buy wall a little bit down to 3. Now we know the sell wall puts a downward pressure. So the sellers would want or need to ask less than 5. Let's say they ask 4 and the trades are executed. On the other hand side, on the bid orders, on the buy wall, we have the wall at 3, and in order for bid orders to be executed, you have to offer more, which in that case would be 4. Hence, equilibrium is found.